Hey guys, so hope you're doing well. It's been some time. I thought I would do a full breakdown on the thought process from DAX shorts that I had on yesterday. And obviously the markets have been in general, so shifting a lot from the day trading side, as there's been a lot of uncertainty, to more taking advantage of the uncertainty from a longer term macro standpoint. So we have the tariffs and we have a lot of geopolitical uncertainty at the moment. It's created a lot of volatility in the market. So to capitalize on both the long and short term is essential. And that's essentially our goal as a portfolio manager and day trader, is to look for these asymmetric returns where we can still look to mitigate risk as quick as possible, but we still want to capitalize on both different market cycles and being able to navigate throughout different trends and environments. So in terms of DAX shorts here, we have been seeing strong sell-off from the DAX index over the last couple of weeks. There has been a lot of geopolitical uncertainty and tensions, especially out in the Middle East, which has definitely impacted stocks. We've had the weak trade sentiment from the tariffs that have been occurring, between the US and Europe, which is obviously slowing down a lot of global trade flows into Europe, which has definitely impacted stocks. And then just like an overall domestic slowdown from Europe and ECB. I mean, Germany's slipping into a recession, and it's not looking good overall from a macro standpoint. So definitely been seeing a slowdown overall from the ECB in terms of money flow, in terms of macro, and it's been impacting stocks, especially the DAX index overall, which has been seeing a pretty strong sell-off over the last couple of weeks. So wanting to take advantage of this from a leveraged standpoint. When it comes to a longer term point of view, I definitely don't prefer using leverage. Leverage is more from the day trading side of things. So from a long term standpoint, being able to scoop up these stocks at discount, scoop up these basket companies at discounts is probably a good idea. And it's what we have been doing over the last 2 months with tariffs, and we've seen the impact that it had on different markets, from ECB and DAX to the Fed, and what it's been doing to NASDAQ and SPX and whatever the case might be. So been buying a lot of these things at discount, and scooping them up really, really cheap, especially a couple individual stocks like Tesla, Amazon, Facebook, and MicroStrategy, Microsoft, whatever the case might be. So not to go on a tangent, let me show you how I'm breaking down this idea in specific and how I'm capitalizing on a market sell-off when things are a little bit, but the volume is still there. So kind of from like a macro standpoint, I mean, we've obviously had the Israel-Iran conflict, which has amplified fears of energy supply and disruptions of global trade bottlenecks. So that's definitely had a big impact on the overall price of DAX. I mean, the ECB's acknowledgements of trade tensions and defense spending support growth creates a mixed picture. So tariff threats on the EU exports, it's definitely not looking good from an overall broad macro standpoint. We've definitely seen it being priced in on the technical side of things. So stocks tumble, the dollar up as Middle East war lights safe haven trade. So we've definitely seen this have an effect. And I think on a technical standpoint, is the DAX overextended? I mean, if we just jump here quickly to the higher time frames, DAX had a pretty good run, in the beginning of the year, where, we saw price trade into like all-time highs. We had that sell-off towards end of mid-April. Obviously a good time to be buying the dip, and basically recovered full into all-time highs, up 20%, and then expanding over another 5% into all-time highs. So, from this run here, mid-April, all the way into highs, I mean, that's almost 30% an extension with no real correction and no real pullback. So I think it was inevitable to start seeing this downturn come from the DAX and the European stocks. So we've seen that, over the course of from, beginning June, we see how, price obviously trading lower. We see these new structural points. We see how price breaks through this EMA. We're no longer trading above the 50. We're holding below it and continuing to print lows, hold into the EMA, print lows, pull back, hold into the EMA, and vice versa. So we've seen this, and we've taken advantage of this, over the last couple of weeks. So in this trade specific from yesterday was no different to anything that we've been doing, and no shift in bias from the last couple of weeks from DAX. So if you just have a look at the last two days worth of price action, looking for these intraday opportunities, I'm not too worried about broad macro, but it definitely is good to keep that in mind in the back end for that bigger picture idea. But looking at the last 2 days worth of price action, where was this? Tuesday, we had these lows printed, and we failed to take out that recent high. So we had these previous day highs, we had these lows, and then we failed to take out these highs here. Coming into the close, we took out the lows, but once again failed to take these highs out. We took out the lows again the next day, failed to take the highs out, and then just continued printing these lower high structures from a technical standpoint, and then from more of a dynamic standpoint, where we had price holding into the EMA, printing lows, holding into the EMA, and just kind of forming this pendulum of bearish market sentiment while price is holding into this EMA. The EMA acts very much like a dynamic support and resistance, if you will. So we can see how price is certainly respecting this EMA. As we trade into it, we repel away and then kind of attract back to the EMA and repel away, and then attract back to it and repel away. So nothing in this sort of arena over the last week or two shows anything bullish to me. Obviously had these major weekly lows taken out, we had these previous day lows taken out, and we continue to see extensions further. So if I just zoom now in over, if I drop down to the 15, and I can give you an idea of kind of where we're looking to get positioned. So we've got an overall bias of the higher time frame, we've got broad macro. If I jump down to the intraday, we've obviously seen that price action print where we see price trading lower. This was London session open Thursday, obviously recording now Friday, but London session open Thursday. Essentially how I'm looking to get positioned is, one, we're forming direction, we're following flows, we're following trend, but looking to get positioned at a certain price is obviously key as a day trader, and then obviously getting positioned at the right time. So it's not just about getting the direction right, but making sure that you get the placement and getting the timing right too, which is essential. So in the day trading side of things, we always have the saying, fighting for price. It's our goal as a day trader to try and get positioned as tight as possible, where we can, mitigate risk and we can maximize return. So the way we look to get positioned is by trading off of areas of value. So the areas that we see value is, strong key points and strong inflection points. So, daily highs, lows, overnight highs, lows. In case of South Africa, overnight we call Asia session. So Asia session highs, lows. These session highs, lows, daily highs, lows, weekly highs, lows. These are strong inflection points that us institutional and retail take into consideration. So I'm looking to get positioned off of these areas, and I'm not just looking for any key level, but I'm looking for stacked key levels. If I can trade off of maybe multiple key levels at a specific area, it's just going to increase my conviction and probability to want to get positioned at this place. And in this case, we had previous day lows printed, we had overnight lows printed, and we also had the EMA coming through around the same price. So as you can see here, we had this what we call value area. Now this isn't trading level 2 or whatever the case might be, but value area meaning an area of interest where we have stacked key levels. We have multiple factors aligning around this price here, 23,240, and we can see clearly that price was trading lower coming into London open. So essentially what we wanted to see was that correction back into value. We wanted to fight for price. We wanted price to pull back deep enough to make it more attracting. We wanted price, in the case of a short, we wanted price to pull back into premium. We can see price holding once again into the EMA. We're holding below previous day's lows, and we are now breaking below overnight lows again. So simple setup of looking for an extension. We got the correction, we got the extension again, and we're just looking for simply the next correction with conviction that price is slowing down, and then looking for that next extension again. So once again, multiple factors here. If I jump to H4, which is also a data report that we bring up quite often, we should probably have some alignment here. If I just jump to let's go here. Let's go. Here we are. 30. If we go here to previous day's range over the last 6 months, we can see that over here we've got 65% chances of closing green and 52% chance of closing red if we do close with the first 15 minutes above or below previous day's range. So in that case, probably not the best data. We're looking for kind of stronger data than that. So let's try and bring out the overnight range report, Asian session range breakout, and let's see what this report says here. So I mean, the first 15-minute candle closure outside, either above the overnight range or below the overnight range, in this case below, first close below the overnight range, 77% chance we're closing red on the day. That's massive, right? So when I'm coming into session, the first 15-minute candle closure below, 70%, over 70%, almost 80% of the chance we're going to be closing red on the day. We're going to be closing bearish on the day. So simply, if I can come into session with this sort of bias and conviction, simply what I'm going to be doing is shorting the rallies, and buying the pullbacks in the case of long. So really good data here. This is based on the last 6 months, which is awesome, and that just really helps this session here, this trade setup here. So we had this 15-minute close, we had this next 15-minute close. So the chances of closing red on the day, pretty high. So that is the broader, bigger picture outlook in terms of bias, in terms of getting positioned, setup. I don't know if you guys like use Elliott wave, but just basic structure. We had A, B, C, D, and then we had that extension. We had wave 1, wave 2, wave 3, wave 4, and then we obviously saw the continuation come through here for wave 5. If you're trading like basic market structure, kind of break and retest, we had these support levels here, price breaking through, holding as resistance, and then basically the same thing happening here, where we had this level of support, we had this breakthrough, price coming back to retest, right? And essentially what we're doing is we're aligning factors. So we're aligning previous day's low here, we've got overnight lows, price extending, coming back to retest, we're holding into the EMA. It really makes sense for us to start looking for shorts and starting to look good. So what I can do is I can jump now to the lower time frames, jump to the 5 in this case. Odd occasions I'll go to the 3. In this case, the setup was kind of more for an intraday 15. So I was looking more at the 5 for an execution, trying to get in tight. And just that internal market structure, where we can see that extension come through, price creating this internal structure here. We're creating higher highs, higher lows off the correction like this, and then eventually printing these equal highs. So the equal highs was good enough for me to start feeling convicted enough to execute here. But we had these equal highs, and then we had that breaker structure down with momentum. So I mean, this was enough for me to want to get positioned. Never looking to short something like these ICT guys off a bullish candle. I want to get short when I see good confirmation. In this case, we had equal highs, and we also had the breaker structure with momentum trading back below overnight. So that's one way to get positioned. If you maybe wanted to get positioned, off the next shift, coming through here. So we had the stall outs, we had the correction, and then the next shift. I mean, that's pretty fine too. I was happy to get positioned right there. So stops just above the highs. And then in terms of targets, once again, I can always utilize lows, I can utilize key levels, but in this case, running a fib from the highs into the lows, coming into that golden pocket here where we have 61.8, 71%, and then extending down into the extensions, negative 61.8, and that just working to the absolute T, as we can see here, coming from pocket to pocket. So fib, definitely a good tool to have in the toolbox. So back to the 5. In terms of management, okay, cool. So we had bigger picture, we had value area, we had execution. So how do you manage this trade effectively? Now, essentially what I'm doing is I want to use as least emotion as possible when looking to manage these positions. So after execution, the first thing I'm paying attention to is, are we holding VWAP and are we holding EMA? That's the first thing. As long as we're holding below my dynamics, that's good enough for me to hold the position. As long as we're holding this overnight low here, it's good enough for me to be holding the position. So in this case, after execution, the first thing I wanted to see was, I don't mind this thing stalling. I just want to see it hold below my areas of value. In this case, we did hold it pretty perfect. If, for example, we popped above, I would have obviously just looked to manage this a little bit tighter and quicker. There's no point in me holding this thing if I can see it's not working the way I would have wanted it to. And we ended up holding first area value. We traded lower, taking out these lows. We pulled back into the EMA again, into supply. We held once again, no need to get emotional and take out too early. We ended up printing lower again, pulling back, and I was at gym at this time and just held full size into TP. So pretty decent trade overall. There's a lot going into it. There's a lot when it comes to thought process, but every single trade is exactly the same, right? We've got broad macro. We run data on Edgefill to build a price. We then obviously make sure there's no short-term data feed or data releases coming out. But I'm looking for simple, clean structure. I'm looking for price pulling back into value. I'm getting positioned off confirmation, and then I'm simply managing based on my EMA and based on where my value areas are. I'm trying to hold full size into TP, whether it's an extension or the next key level, and then I'm simply managing my position quicker than full risk. So in this case, risking $500. If I can manage it for $250, if this position doesn't work as planned, then that's still a win for me. So just looking for asymmetric returns, looking to trade with edge. I'm looking to hold full size when things are doing well, and I'm looking to cut trades quickly when they're not doing well. So that's kind of the thought process behind this DAX position here. And yeah, if you guys learned anything, drop a comment down below, and I'll see you on the next one. Cheers.